As of July 7, 2025, the digital currency landscape finds Pi Network at a critical juncture. A tense calm hangs in the air, a palpable sense of anticipation that something is about to give. The market watches, holding its breath as Pi Network navigates this period of delicate equilibrium. Currently, Pi Network is trading at 45 cents. This price point has become a stubborn anchor, resisting significant upward or downward movement. It's a price that reflects the current balance of power, or perhaps the lack thereof, between buyers and sellers. For quite some time, Pi Network has been unable to break free from its narrow range. This consolidation phase speaks to a market struggling to find direction, a tug-of-war with no clear victor. The price continues to bounce between established support and resistance levels, creating a frustrating environment for traders seeking decisive action. The market is indecisive, caught in a state of suspended animation. There's a lack of conviction on either side, leaving Pi Network vulnerable to external forces and internal pressures. This hesitancy is reflected in the behavior of both bulls and bears. Neither camp seems willing to commit fully, resulting in a stalemate that prolongs the period of uncertainty. The bulls lack the momentum to push the price higher, while the bears are unable to trigger a significant sell-off. Adding to the sense of unease, trading volume has plunged over 40% in the last 24 hours. This dramatic decrease suggests a waning interest in Pi Network, or perhaps a collective holding pattern as traders await a clearer signal. The total trading volume has fallen to just $28.5 million. This figure underscores the current lack of engagement and highlights the potential for significant price swings once volume returns. This low activity signals uncertainty and a general reluctance to take on risk. Investors are sitting on the sidelines, waiting for a catalyst that will break the current impasse. The market is also experiencing a lack of buying pressure, which further contributes to the stagnant price action. Without sufficient demand, Pi Network struggles to gain upward traction. This delicate balance leaves the market vulnerable to sharp moves either up or down, depending on which force ultimately prevails. A sudden surge in buying or selling pressure could trigger a rapid price swing. Interestingly, volatility has contracted significantly in recent days. This period of low volatility is often seen as a precursor to a more explosive move. The reduced volatility is trapping Pi in a tight corridor, further amplifying the sense of pent-up energy. The longer the price remains confined within this range, the greater the potential for a significant breakout. This pattern of compression is often a precursor to a major breakout, a moment when the price finally breaks free from its constraints and establishes a new trend. The big question on everyone's mind is, which direction will it go? Will Pi Network finally break to the upside, fueled by renewed optimism, or will it succumb to selling pressure and trend downwards? The current equilibrium is fragile, teetering on the edge of a significant shift. The apparent stability masks underlying tension between supply and demand, a silent battle being waged beneath the surface. This tension is building, creating a coiled spring effect that could unleash a powerful move in either direction. With price action muted and volume low, the market is primed for a surprise. The stage is set for a dramatic shift, a moment that could redefine Pi Network's trajectory. Traders are on edge, keenly aware of the potential for a sudden and significant price movement. They are closely monitoring the market, knowing the next catalyst, be it breaking news, a significant technical move, or a shift in market sentiment, could spark rapid price action, triggering a cascade of buying or selling that overwhelms the current equilibrium. This prolonged standstill isn't a sign of health but rather a symptom of underlying market tensions and uncertainties. It's the quiet before a potential storm, a period of deceptive calm that precedes a surge in volatility. Vigilance is crucial for anyone exposed to Pi Network right now. Staying informed, managing risk, and preparing for potential volatility are essential for navigating this uncertain period. Pi Network's journey towards wider adoption and increased value faces a significant hurdle. Currently, the digital currency is encountering a stubborn resistance level in the range of 47 cents to 48 cents. This price range has proven difficult to overcome, acting as a ceiling on Pi's ambitions in the short term. This isn't just a technical barrier defined by price charts, it's also a psychological and strategic barrier. Traders and investors often perceive these levels as significant, influencing their buying and selling decisions. The resistance zone represents a point where selling pressure consistently outweighs buying interest. Each attempt to approach this zone triggers heavy selling activity, indicating that many holders are looking to exit their positions around this price point. This selling pressure can stem from various factors, including profit-taking, fear of further price declines, or simply a lack of confidence in PI's ability to break through. This consistent selling pressure reinforces the importance of this resistance level, solidifying its role as a key area of interest for traders and analysts alike. Technical analysts will be closely watching how Pi network interacts with this zone, looking for clues about its future direction. The repeated failures to break through this level contribute to a self-fulfilling ceiling effect. The more times Pi is rejected at this price, the more traders anticipate a reversal, leading to even more selling pressure when the price approaches the resistance. However, a successful breakout above this resistance would send a powerful signal to the market, indicating that sellers have become exhausted and that buyers are finally in control. Such a breakout could trigger a significant price surge, potentially pushing Pi network towards the next target around 52 cents. This would represent a substantial gain and could attract even more buyers into the market. Conversely, repeated failures to breach this level will likely have a negative impact on market sentiment. These failures erode confidence among potential buyers and embolden bears, increasing the likelihood of further price declines. The longer the resistance holds, the more bearish the outlook becomes. The longer Pi network remains below this critical resistance level, consolidating without a clear breakout, the more probable a downward move becomes, potentially leading to a retest of lower support levels. Therefore, this resistance zone is not just a minor obstacle, it represents the main hurdle to any potential recovery and sustained upward momentum for Pi network. It serves as the key benchmark for gauging overall market sentiment towards Pi and its future prospects. Overcoming this resistance is crucial for restoring confidence and attracting new investment. A sustained move above this level would signal a significant shift in momentum, suggesting that the bulls are finally gaining control of the market. Conversely, continued rejection at this level only confirms the bears' continued control over the market, reinforcing the downtrend. Therefore, for the time being, this price zone remains the most important area to watch closely for any potential trading opportunities or shifts in market dynamics. Ultimately, the market's next significant move hinges on how Pi network interacts with this critical ceiling. Will it break through and reach new heights, or will it be rejected once again, leading to further declines? Only time will tell. Technical indicators for Pi network are flashing red. The RSI is below 50 and trending down, signaling sellers are in control and momentum is accelerating to the downside. The Supertrend indicator is red and above price, a classic sell signal. As long as Pi remains below this line, rallies are likely to be short-lived corrections, not new uptrends. Both RSI and Supertrend paint a consistent picture. Sellers have the upper hand. For a bullish reversal, RSI must cross above 50 and price must break the Supertrend. Neither looks likely now. The technical landscape is fraught with warning signs, urging caution. Risk management is essential until a clear trend change emerges. Momentum tools like MACD and the Chande Momentum Oscillator, CMO, reinforce the bearish case. The MACD shows a bearish crossover, short-term momentum has turned negative. Its histogram is in the red, confirming downward pressure. The CMO is below zero and falling, showing intensifying selling. Both indicators are aligned, pointing firmly down. This rare synchronization boosts confidence in the bearish outlook. Any rally attempts are likely to be met with renewed selling. Until these indicators reverse, the technical outlook remains negative. Avoiding exposure or preparing for further declines is the prudent play. Support at $0.445 is Pi's last line of defense. A break below would trigger a technical breakdown, likely unleashing a wave of stop-loss selling. This could push Pi rapidly toward 42 cents and possibly 38 cents, where stronger support may emerge. If $0.445 fails, it becomes new resistance, making recovery harder. The battle at this level is crucial for Pi's short-term fate. A bounce could spark another test of resistance. A breakdown opens the door to deeper losses. Analysts are watching this level closely. Its breach would confirm the bearish thesis and signal more pain ahead. Extreme vigilance is warranted. Beyond charts, fundamentals are weighing on Pi specifically. A surge in unlocked tokens. More Pi is hitting exchanges as vesting periods end, increasing potential selling pressure. A major token unlock is imminent, expanding supply further. With demand weak and volume low, the market may struggle to absorb this influx. The fear of a price drop can trigger preemptive selling, compounding the effect. Bulls face not just current selling, but the shadow of future supply. Without a surge in demand, the path of least resistance is down. The supply-side squeeze is intensifying. The law of supply and demand is in full force for Pi Network. Token unlocks are flooding the market with new supply, but demand remains tepid. Sellers must lower prices to attract buyers, pulling Pi's price downward. Early holders, often with low-cost bases, are motivated to sell, even at declining prices. This creates persistent selling pressure that overwhelms cautious new buyers. The link between rising supply and falling price is direct and undeniable. Until the market digests this new supply, rallies will likely be sold into. The imbalance is overriding short-term technical patterns. A new lower equilibrium is likely before stability returns. For now, supply is winning the battle. Analysts see a challenging road ahead for Pi Network, marked by uncertainty and potential volatility. They're carefully examining various factors that could influence its price trajectory in the coming weeks and months. The overall sentiment suggests a cautious approach, given the current market conditions and the specific challenges facing Pi Network. Most forecasts predict a continued downtrend, painting a rather pessimistic picture for the short to medium term. These predictions are based on a combination of technical analysis, market sentiment, and an assessment of the project's fundamentals. The analysts are closely watching key support and resistance levels to gauge the potential extent of the downward movement, especially if $0.445 support fails, a critical level that, if breached, could trigger further selling pressure. This support level has acted as a buffer in the past, and its failure would signal a significant weakening of the price structure, potentially targeting 42 cents, 38 cents, or even 35 cents. These price targets represent potential downside risk based on current market analysis and prevailing bearish sentiment. Investors should be prepared for the possibility of further price declines if the negative trends persist. The bearish case is built on weak technicals, indicating a lack of buying interest and a prevailing downtrend. Key indicators, such as moving averages, relative strength index, RSI, and MACD, are all pointing towards continued weakness. Persistent resistance and looming token unlocks, which could further increase selling pressure in the market. The presence of strong resistance levels makes it difficult for the price to break upwards, while the upcoming token unlocks could add to the supply and potentially depress prices. Few see catalysts for a reversal in the near term, suggesting that the current negative sentiment is likely to persist. Without any significant positive developments or market-wide rallies, it's unlikely that Pi Network will experience a substantial price recovery. The bullish scenario? What would it take for Pi Network to defy the current bearish trends? Pi must reclaim 47 cents, 48 cents on strong volume, signaling a decisive shift in market sentiment and buying pressure. This would require a significant influx of capital and a renewed interest in the project to invalidate the bearish thesis. A successful breakout above this level would suggest that the downtrend is over and that a new uptrend may be emerging. Only then could 52 cents or even 60 cents come into play, representing potential upside targets if the bullish momentum continues. But that would require a major shift in sentiment or fundamentals such as positive news, increased adoption, or significant technological advancements. The consensus, caution prevails, reflecting the overall uncertainty and risk aversion in the market. And the path of least resistance is down. This suggests that, in the absence of any positive catalyst, the price is more likely to continue its downward trajectory. Any surprise rally would need a clear catalyst, such as a major partnership announcement, a significant technological breakthrough, or a sudden surge in market demand. For now, consolidation or further decline is the most probable outcome, as the market awaits further developments and a clearer direction. Investors should remain vigilant and closely monitor market conditions before making any investment decisions. So, what should investors do? Buy, hold, or wait? The answer depends on your risk tolerance and belief in Pi's long-term potential. Aggressive investors might see a buying opportunity, betting on a reversal at peak fear. But this is a high-risk gamble, with significant downside if the bearish trend continues. Conservative investors will likely wait for a confirmed trend reversal before acting. The evidence points to caution and capital preservation. Where do you stand? Is this collapse or opportunity? Share your analysis and let's navigate these uncertain waters together.